Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, February 19th, 2021. What we're going to do is start out with a brief overview of the broad markets, the major stock indexes. We'll then touch on gold, crude oil, natural gas, pretty much everything I updated yesterday, and as well as an update on Bitcoin and some of the crypto alternatives. Time permitting, I'll touch on Treasury bonds. I'd like to point out something there. Okay, all right. So nothing new right now since yesterday or last couple days. We're still just right up above that trend line on QQQ. I'm referring to the primary trend line off the March lows. Need to break that solid break, and especially a solid daily close down below to give us a sell signal. Otherwise, we remain above trend. And on the 60-minute charts, let's jump down there real quick. We did have a sell signal, and we are, still moving lower. Not at this moment. We have a little snapback rally today, but this is the last breakdown right here, following the most recent divergent high, and there we are, zigzagging lower. Obviously from here, if we go up much above, this was the first target, or first support actually. First support was 13,756. This was the first target. Hit that target, slightly overshot it, but ideally you want to stay down below the recent reaction lows. Here, I'll try to show you. We'll zoom in here. Right there. There's our reaction high right there from the other day. That's about 13,785. Again, you can go above it and fail. A lot can happen. As I mentioned before, the divergences are still going to be intact anytime soon, unless we go much higher above the recent highs there. But again, right now I'm looking at what is a near-term downtrend, but we start to go up and take out those previous reaction highs. That's what kind of chips away at it. All right, so that's NQ right now. So again, short-term, aggressive trades. A case could be made, was made to, go short there, and could still be to stay short. But you have that big trend line resistance on the QQQ daily chart, which was hit at the lows here on NQ yesterday at the same time, and that was a catalyst for the bounce. Buyers stepped in, buy programs will fire off at support levels like that, and so we need to see that taken out, and that'll open the door to more downside. Unless that happens, more of the same. S&P 500, no updates there really. Same story. Trendline break, back test. Rolling over, but not impulsively yet, and need to take out the recent lows. This little line right there, that's what we need to take out in ES to get some selling going. Otherwise, we continue to kind of remain just above the recent highs. And then RTY, small caps, pretty strong counter trend bounce today. I'm referring to a counter trend in the very near term. Remember, you have long-term trend is bullish, but the very near-term trend is bearish. We broke down here below the uptrend line, 60-minute uptrend line. Danced on this 2258-ish, 2259 support for a while. Took it out, back tested, moved lower, put in this little divergent low, at least RSI divergence there, and moving up. And so pretty much we have a little minor reaction there. It would be ideal to see a fade of RTY into the close today. If they continue to build on these gains, well, doesn't help the short case. So, the way to spin this, it is a kickback rally, and you can say the sell signal is still intact here on the 60-minute chart, but you don't have any sell signals on the daily chart. So, if you were, let's say you were thinking about shorting or adding to. Yeah, not now, not in this kickback rally. Wait till you get some downside, some reversal. And again, we're not going to know a lot. Even if we get a little leg down today, we'd have to take out these lows to say, with a good degree of confidence, hey, we're going to go on and hit this next target zone. I think it'll be hit, but the problem is today's Friday. We have just about a little over 4 hours, a little less than 4.5 hours to go before the close. And we probably won't get that with RTY, the small caps futures up 2.5%. That would be one heck of a fade right there. And again, with the recent price action being pretty resilient, I don't expect that to happen today. So this will be continued next week. I don't think we're going to have get many clues before the close today. So levels to watch for going into next week. We'll leave it at that. Okay, so I'll jump into crude and then gold, because crude's not always, but usually more closer related to the stock market. And so on the same, the same case that could be made for a short on NQ with the breakdown on the 60-minute chart. You have that, the sell signal triggered. I highlighted this trend line on CL. These are crude futures. Highlighted this uptrend line the other day and divergent high, and said, sell signal would be triggered, which it has been. So there is a sell signal in play on crude. It dropped. It was impulsive, little snapback rally, and we're still below trend. So the case can be made. Case can be made for an objective short here because you're below trend. It's a snapback rally. Better to buy or short up here than to short right here, obviously. But you want to put the odds in your favor, wait to see some additional evidence in the broad market, and that's not just those indexes I've covered. Additionally, I'm still waiting on Tesla to see, or the other FANGs, to see if they can show us anything. Tesla's just hugging that support, that 800-ish support, for the last few days. So like I said, the only one of the big market leaders, what I call the FANGs, that's broken down is Apple so far. Apple giving us a clear sell signal, almost hitting that first target there, 125.75. I'm talking about the sell signal below both trend lines. The purple trend line I was really focusing on, but it also comes in with this trend line off the March low. So dual trend line support. There's a breakdown, sell signal on Apple, but guess what? One stock, as big as it is, the largest component in the S&P and the Nasdaq 100, single-handedly, it's not going to take down the market. There's 99 other companies in the Nasdaq 100 and 499 other companies in the S&P 500. So we need to see some other of the big market leaders break down. Let's just look at those real quick. I'll rifle through them fast. So there's Apple, which I already covered. Microsoft still above the breakout. I'm talking about the break above this trading range right here. So even if it pulled back this much, it could just come in to back test the range or that uptrend line. So as I said in recent videos over the last week or two, I want to see this uptrend line right here go. That's comparable to the trend line that Apple just broke that I was highlighting. So anyways, Microsoft right now, you cannot knock this as anything but bullish unless that breakout fails. So that's what I'll be looking for in the coming weeks. Amazon, go nowhere. And that's this common theme. This is, it doesn't guarantee a market drop. This could just be healthy consolidation before the next major leg up. But historically, when the market leaders stall out, when they stop going up and the rest of the market, especially lower quality, lower tier stocks, which is certainly the case, that's why IWM is, again, outperforming today. That is often a red flag or a sign that, you may get a major top in the market, a major, correction coming. So something to watch. And again, say what you want about these FANGs, but you cannot argue that Amazon has gone absolutely nowhere. It's trading today where it was 7.2 months ago. That's in my little pop-up box to the left as I grab back here on, when is that? That is February 18th, yeah. No, I'm sorry, not February 18th of last year. That is July. That is July 13th. There it is. All right, so that's that. Facebook down today, but Facebook's at support. I have these a lot of the FANGs in these trading ranges like this. There's my box. I don't know if you can make it out because I have a lot of colors and things here, but that blue level's a box. And when you get a trading range, I can often put a line, which I did here in the midpoint at 265.10, and that acts as support and resistance. Typically, when you're above, it's support. You break that support, you head to the bottom of the range. You break it to the upside, you go to the top of the range. Simple stuff. And right now, we're testing that level right there. So, Facebook's at support. If you're a bull, case can be made to step in long. I'd rather wait for a break of it and go short because of the technical posture and everything I've just covered. Nasdaq, futures, 100 futures breaking down recently, and still on that sell signal. And if this happens, again, I'll cover all these FANGs, because if you get a break here, and Tesla breaks down, you're going to see QQQ break that primary trend line. So there's Tesla, already covered that one. There's Alphabet, what it looks like, strong. Can't knock this one at this point in time. That's GOG, or you could look at GOGL. You could put a minor trend line. This will probably show better on a 60-minute chart. Break of that would be bearish, at least near-term bearish, and could open the door to some selling. And then there's a big old gap below where the arrow shows where they reported. That was the earnings date The gap up came the next day because they report after the bell. So this is their post-earnings cluster. You know what? Now I look at it, it sets the stage for a beautiful island top cluster, or island cluster top. That's when you have a cluster of candlesticks separated by a gap on both sides. Now, only, I talk about a lot of potentials here. Don't ever get, a setup confused with an actual trade idea. This stock's in an uptrend. These are just things to look for. If it were to gap down below the island, it'd be a pretty big gap too, but if it gapped down below the island or even close to the bottom of the island, that would give you what's called an island cluster top. Those are potential reversal patterns. That would leave a cluster of candles like that. And again, just one thing to watch. But if you get them, what in my experience, they're pretty darn accurate, pretty reliable topping patterns, candlestick patterns. So again, just something to look for in the days or weeks to come. And then the other one I wanted to cover, I've updated a couple times, is Netflix. This is the old school calls them FANG. Still, I like to call them FANG, FAAMG, because Netflix doesn't have the weighting that Microsoft does. Net FANG rolls off the tongue a little easier than FANG, FAAMG. But there it is. So Netflix, I've highlighted in this multi-month pattern, like all these other big market leaders topping out, stalling out recently. And also you have the midpoint line right there. There was a little false breakout. I think I pointed that out at the time. Yeah, I did. We came down. We hit that midpoint perfectly. That gives you an opportunity to, either cover or short if you shorted the top of the range, or go long, bounce up to the top of the range. And we just took out this minor trend line right here. And that increases the odds now of another move back down to the midpoint of the channel. And should that happen, then you watch for a potential break. You're either going to bounce or break it. And if you break, odds favor a move down to the bottom of the channel. And that would also put some pressure on the NASDAQ 100, because although it's not one of the top 5 holdings, it is one of the top 10 holdings. Next up, gold. I highlighted gold yesterday as, potential objective long entry here at support. That's that previous direction low. This is gold futures GC. We're looking at 2-hour candles or bars. Bars show better here. I can toggle over to candles, but you see you could look at either one, same difference. And so far we held that support, slight undercut, but we still have pretty strong divergence, positive divergence in place. So again, one of my the better looking commodities, or if you want to put it in the commodity arena, precious metals, either way, there's your potential targets. So I still think it's an objective long entry here with a stop somewhat below those recent lows. If you jog down, it's undercut that low, there's a possibility you can make a slightly lower low one more, and you're still going to have positive divergence. So where you put the stop is up to you. You just don't want to use a 5 or 7% stop loss if you're going for a 5, 6, 7% upside. You want a favorable risk reward ratio. Don't risk $1 to make $1. Risk $1 to make $3 or more dollars. That's what I like to do. So pick your target. I think any or all of these are possible. Yeah, it's going to depend on what the dollar does, and right now the dollar and the euro have kind of been stalling out recently. I'll show you real quick. So if I can find that, where's my dollar chart? Here we go. DX, dollar futures. Been in an uptrend. Highlighted this, potential bottom here, and turned out to be a bottom. Called for rally there. Breakout number 1, back test, breakout number 2. A lot of breakouts, and the dollar was in an uptrend, moving higher. Still is in a near-term uptrend off that low, although lately, see, we come back down. We have big support right here, and it's kind of just stalled out, this rally in the dollar. So it's not going anywhere anytime fast, and where it goes from here will likely impact where gold goes. So like I said, I call it a soft buy on gold. I'm not all in, but I think the risk reward is attractive right now. More so than a lot of other asset classes out there. And the other one I highlighted yesterday, first posting it in the comment section right here before we broke down, saying, someone asked short-term outlook. I said break of this level here should send us down to this trend line, and so far we had the breakdown, impulsive leg down, little snapback rally, which provides for an objective entry, and maybe keep it below the breakdown point, stop, and swing down there. Longer term, I'm still bullish. I've made the case a while back for a big move in natural gas here. Let me show you that chart. All right, this is one of them. This is one of my longer term nat gas weekly charts. Simple stuff. I don't like to get too complicated. The more moving parts you have, more indicators, it's harder to keep up. So on this, you're looking at a weekly chart with an RSI, one of my go-to indicators, PPO. Simple stuff. Look for what you can see down here at the bottom. Look for these similar conditions, that lead to rallies and corrections. You want to watch the RSI for overbought readings like that. That often coincides with the top. And for going long, I like to see a couple things. I like to see bullish or positive, aka positive divergence. Look for these divergent lows. Oversold conditions as well. That's the 30 level, that bottom line right here on the RSI. So you get to that level, and it's usually not the first drop to the 30 level on the RSI. You get a drop there, you get oversold, and then you get a little less oversold. That's exactly that's what causes positive divergence. The indicators coming in making, well, this is RSI higher lows. So I made a mess with all these lines, but you can see. So that's it. And so back here, more recently, back in July, it looks like I mentioned, highlighted. Look, here's our most recent divergent low. There's that. See that first tag of the 30 level, and then you came in higher with a lower low in prices, and so that's it. That's natural gas moving higher. That's a longer term outlook. This is a weekly chart, and these are, again, the case can be made, I think, for a much higher rally. Look what happened when we bottomed here with positive divergence. Before all is said and done, we went all the way up to that almost $5 level. Divergent low there. Look at that rally. Divergent low there. Nice big rally. So again, potential for more upside there longer term, but then longer term, that's for investors if you want to tuck away. Natural gas is so volatile. Even if I believe there's a long-term bullish trend to be had, I'll always micromanage that trade based on the 60-minute chart, the daily chart, because you want to sidestep the corrections. Natural gas is so volatile. Even the quote-unquote little pullbacks along the way are, and this one's 17%, this one was 18%, this drop was 20%. So again, up to you if you're comfortable riding out 20% drawdowns. But if you hone in on these 60-minute charts, they're your guide. You can see the divergent low, get out of shorts or get long, divergent high, get out of longs or get short, divergent low, etc., etc., etc. So that's it. All right, next one up will be, I'd like to go over all the commodities, but that's probably another video in itself. Ag commodities, everything's just been ripping at all-time highs. Copper making a new high today. Industrial metals, agricultural commodities, and yet the Fed is, in my opinion, I don't know. They're dismissing the rise in commodities as being transient. They see no risk of inflation. Again, we can agree to disagree, the Fed and I, on that, because I'm not just looking at a bounce. I've made the case that most of the rallies that we've seen in commodities are indicative of early stage bull market action and not bear market counter trend rallies. So we'll see. Time will tell who's right. But let's talk about a related thing here. Another thing that I disagree with on the Fed, and that's cryptos. Let's look at that's what's been just going crazy lately. I'm going to start with show you the Bitcoin futures, because I've updated that recently, BRR, and then I'll get to the ETFs for those of you that don't trade futures. All right, BRR, again, this is a 60-minute chart, 3 months, hourly candles. I'll zoom in a little tighter so you can see what's going on. Let me just stay here on this. Here's a longer-term trend line I think we've ultimately come back to once the tide changes, meaning we go from a bull trend to a bear trend. There was our last correction there, our last divergent high right here, and here was our last divergent low, and we're walking up this uptrend line. We have negative divergence. This is a rising wedge. The one thing that changes on this is a very well-defined uptrend line. This is not a trend line per se. You can call it's my divergence line. Divergence can and will change. So, in other words, this can take a different slope. If this rally continues, let's say up to this point, then this is our divergence line. We still have the primary trend line. Sell signal will only come on a break of this trend line. I mean, there's other ways. We could get candlestick reversal patterns and things like that. But right now, we have the negative divergence. It could be burned through over time. That means if we keep going up, 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 and then we finally take out the previous reaction highs. But that's it. So this is on watch for a breakdown and a sell signal. But as of now, the trend is up because we remain above trend here. I'll zoom in a little tighter like I said I would, so you can see that. There's your trend line. Comes off the lows on January 27th. That's how I have it drawn. You can see a couple I can even move it a hair lower, grab it to account for these reaction lows like that and that one right there. But you get the point. There's your trend. Now, as far as ETFs, GBTC was one of the first to market. Bitcoin, sort of an ETF, works very similar. Bitcoin Trust. There's your uptrend line as well. And there's your negative divergence as well. So this one's building divergence in an uptrend, no sell signal yet. Been quite strong lately. And then there's another one that I'm starting to track as these cryptos gain more traction, more popularity, and that is ETC. What's that symbol? No, it's ETCG. Yeah, I typed in wrong. ETCG. That's the same company, Grayscale, and they have the Ethereum Trust. So again, similar to a ETF. All right, so this one I want to just point it out for those of you in these cryptos. This one hit major, or well, not major, but decent resistance. You have a major reaction high there. That was clearly a distinct reaction high. You also have a reaction high right there, and we hit that today. So it's been a heck of a ride. We had a downtrend line here. It broke out. It back tested for a while with a little mini downtrend line, and after back testing for a while, boom, off to the races. And these things, they're high flyers, and it went up on just a short order about 166%, but at resistance. And so I think we get a pullback here. I had a friend call me today. I said, I'd take profits there if I had it. I wish I was in this one. I'm not. Would have pulled back. You look to get a pullback to that 17, call it 1750-ish area. That might provide an objective entry. As long as this game of musical chairs continues. These things, I could sit here and talk all day long. I know there's crypto bulls that make a solid case fundamentally. I have a hard time wrapping my head around that because these things are some of them, like Bitcoin, there's a limited quantity. Once all the Bitcoins mined, that's it. There's that many out there, no more. And that in itself would give it value. So if Bitcoin was only crypto out there, however, you can make a crypto like this. Anybody can make a crypto. They made that Dogecoin, which has been flying. You guys have probably read that in the headlines lately. And it was created as a joke by the creators, and now it's taken off. But that one is not limited. That has unlimited. They're not shares, units, whatever. And so here's my point. There are already, and there have been for a while, dozens and dozens, if not hundreds, of cryptos out there. And so the Fed prints unlimited amount of U.S. dollars. I get that, and the ECB can print unlimited amount of euros. That's what we do. That's how the major central banks are funding their all the bond buying programs and everything else. However, there's always been an implied backing on those fiat currencies. Have the European Union and the United States. They have taxing authority. They have tax revenues and all that. Where these guys have nothing to back them but just people buying them. So, anyways, longer term, I just can't wrap my head around how these things can continue to have this kind of value and grow when there can just be an unlimited, and there will be an unlimited supply. What is to stop people from rolling out the next crypto more and more? And why not start your own crypto? So one day there'll be a saturation point. But until then, hey, the fundamentals do not matter. We know that because there really are no fundamentals to this at all. There's no earnings. There's no backing by any type of government or corporation or anything otherwise. So there it is. I just wanted to give you levels, and then just a little side note, because I like to mix in some of the fundamentals. I Google the headlines. Is the Fed concerned about Bitcoin challenging? Because here's the thing. Bitcoin's been around. It's nothing new. But what's happening is with these recent rallies, and you have Elon Musk, a lot of people hang on his every word, legitimizing these cryptos. And with Tesla taking a $1.5 billion stake in Bitcoin recently, and then more importantly, announcing they're going to accept that as payment for their cars. And then you have the Bank of New York Mellon, the oldest bank in the country, also now announcing they're going to process Bitcoin transactions for their customers. So to me, it's insane that the Fed is so dismissive. This is Bullard came out the other day and said that he doesn't see any risk to the U.S. dollar with Bitcoin. Um, and you can go on, you can Google their headlines, but I think it's just dismissive for the Fed to say that. Maybe he's saying that so he doesn't create a panic out of the dollar, but as more and more institutions accept Bitcoin as a form of payment, that is a direct threat. If you can go up, they talk about in here, and he even mentions that you can go up to Starbucks and buy a cup of coffee and pay in Bitcoin or Ether or something else. That's you're taking your money out of the dollar. And what it is, the younger generation, who's over time, there's more and more. They're all the old farts are dying off. They're the ones that are much heavier in these cryptos. And I saw some numbers recently. I don't know. I think it was like 80% of millennials have or believe in crypto, and it's a much smaller number of the boomers. So where I'm going with that is, sooner or later there's going to be a risk to the dollar as more and more institutions, corporation companies, legitimize it by accepting payment. More and more people are going to move money out of dollars into crypto. That's been the trend. It's a clear trend. And also as a store of currency. And just keep it very simple. The way the entire banking system works, I worked many years for banks. Banks, it's very simple, at least the way it used to be back in the day, and it still is to an extent. There's some complicated things. They make money from other things now other than just pure banking, but it's simple. They take deposits in from you and I. That's we put our money in checking accounts, savings accounts, and CDs. Those are deposits. They turn around, they pay you X on the deposits. Let's say you're not getting this now, but let's say they pay you 2%, and they turn around and they loan it out into car loans, mortgages, home equity loans, business loans at 5, 6, 7%. That's a spread. That's how they make money. But they can't lend out money they don't have. They have ratios. So all of a sudden, if more and more of that money is being siphoned out, the younger generation, as they come up and cryptos get a more of traction. Let's say you have 100 grand. Normally you cash, liquid assets that you'd have in money market and savings and CDs. And of that, you might have 20 now in your Bitcoin and Ether and all your other. And then maybe a year from now, 58. Ultimately, that number gets closer to 100%. And the more and more money that gets siphoned out of U.S. dollars, aka reserves at the banks, will ultimately have an impact on the entire financial system and the way the dollar works. So I think it is just borderline. Let's just say it's. I don't think it's very wise for the Fed, be just so dismissive on any kind of threat. So we'll see. But the thing about these things, I've lived through, 1999, the dot-com bubble, and seen plenty of bubbles. Crypto is going to go up until it stops going up, and by far the best chart and the best guide will be the charts. That's going to give us clues. So we'll watch these levels. I'll continue to give you updates. And the one thing about crypto is when it corrects. And this is GBTC again. This is Bitcoin, and don't be fooled by log scaling. If you take off log, this is what it looks like. It's gone parabolic when I take off log scaling there. And put on arithmetic scaling. But let's go back to the log scaling here, and back to there we go. All right, so that's it. That's what we're looking at, and we have divergences building. And when you finally have these, corrections, they've been pretty powerful stuff. That one was a 90% drop. Again, 90%. So just keep that in mind. If you had $100,000 in your, Bitcoin back then or GBTC, and you did nothing, and you froze like a deer in the headlights, didn't stop out, you were down to about $11,000, or actually under that, about $10,000 there. At that point, just a year or so later. And now, of course, that was a big one, but here's another drop there. Also followed by a divergent high. Again, the technicals can help you, sidestep these moves. That was a 70% drop from this divergent high right here. to that low right there. So we have similar conditions, divergent high. Oh, and a potential buying climax. Buying climax is when a security which has been in a strong uptrend finally has a big surge where it's just everybody, it's that final FOMO move, fear of missing out. Everybody wants in, heard about how much money everybody else is making, and you see a huge surge in volume like you did back here. Hopefully you can make that out in the video. There's a big boost in volume right here. And maybe that's what we're seeing now, another potential buying climax in Bitcoin. So back to that BRR chart. We'll let the charts be our guide, and that's when we might get a sell signal there if we get a solid break of that trend line. So I'll continue to update that. Let's see. And then finally, on a related note, RIOT's one of the proxies I use. GBTC directly tracks the price of Bitcoin, whereas RIOT is not. It doesn't hold Bitcoin, it's blockchain technology, but it's related. And it's gone parabolic as well. Maybe potential buying climax there. Only time will tell. Well, there's a little minor trend line right there to watch. This minor trend line. We had a price channel. It broke down as highlighted. That was a sell signal we gave back there. Almost hit that first target of 1553 bounce, but got back in the channel. But still, you have this trend line here to watch. And when you look at a weekly chart, here's what RIOT looks like. If you're wondering how far it might go until this whole uptrend stops, well, you had a big divergent low back here on the weekly chart. Nice, strong, positive divergence, just like you had back here. Divergent low, that was the last divergent low. So your divergences, and that one was good for a rally of about 2,960%. So about a 3,000% gain in RIOT back then. This one so far is good for about a 16,664% rally so far. And I don't really see much resistance until up here. Doesn't mean it, that it's going to go right there, but it could. And if it does, I can tell you that's pretty good resistance. In fact, you probably have some coming in start around that reaction low. Yeah, there's your resistance range, or 3 different resistance levels. You can call it a resistance zone, about 107 or 106, 190, and 300. And we're at about 75 right now. Again, this is a log chart. That's why that move I just told you, those gains, I didn't incorrectly state those gains. When you put it, on an arithmetic chart, this is what the move looks like. Log chart just puts things. I highly suggest using log scaling when charting any security that's had a big price move like that, because it puts the moves in equal percentage terms, not dollar terms. Because there's a big difference when a security is $1 share and it goes up $1, that's 100% return. But when you get to $100 a share and it goes up $1, that's a mere 1% gain. So that's what log scaling does. It adjusts that for you to put it in percentage terms, and gives you also, it lets you draw some clean trend lines as well. You can't really draw up trend lines on a chart like this without using log scaling. All right, I'm going to wrap it up here, get the video out to you guys. Those are the things I'm watching. Stock market's still waiting some, the next or some solid sell signals on the indexes and some of those market leading stocks. Crude broke down. I think there's more downside to come in that, but it's really going to help to see the stock market break down. Natural gas might have a little more downside on a pullback trade. Beyond that, I'd get out if you hit that trend line. I won't have a strong opinion once we get there. Probably bounce. And gold. Gold looks like it's worth taking a shot here with a stop not too far below. And if you can tell from my voice, I'm not screamingly bullish or bearish about any of those things at this point in time. There's nothing wrong with standing aside, keeping your money in cash, waiting for a little higher probability trade to come along. Okay, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.